Before the fraud and bankruptcy case, FTX was one of the largest and most successful cryptocurrency exchanges in the world. The company was founded in 2019 and quickly grew to become one of the most popular exchanges for trading derivatives such as futures and options. FTX was known for its innovative products and services, as well as its user-friendly interface. The company also had a strong reputation for customer support. In January 2022, FTX was valued at $32 billion, making it one of the most valuable cryptocurrency companies in the world. The company was also backed by some of the biggest names in venture capital, including Sequoia Capital and SoftBank. However, in November 2022, FTX was forced to file for bankruptcy after it was revealed that the company was billions of dollars short of customer funds. The company's founder and CEO, Sam Bankman-Fried, was arrested in December 2022 and is currently facing multiple criminal charges, including wire fraud, money laundering, and securities fraud. The collapse of FTX was a major shock to the cryptocurrency industry. It eroded trust in exchanges and other crypto businesses, and it led to a decline in cryptocurrency prices. Bankman-Fried is accused of using customer funds to fund his own cryptocurrency trading firm, Alameda Research, and to make lavish personal expenses. He is also accused of misleading investors about the financial health of FTX and Alameda. Here are some of the specific allegations against Bankman-Fried. He allegedly diverted billions of dollars in customer funds to Alameda Research, without the knowledge or consent of FTX customers. He allegedly used customer funds to make lavish personal expenses, including the purchase of luxury homes and real estate. He allegedly misled investors about the financial health of FTX and Alameda, by claiming that the companies had more assets and less debt than they actually did. Bankman-Fried has denied all of the allegations against him. His trial is scheduled to begin in October 2023. If convicted, he could face up to 20 years in prison. But now the main question is, how Sam Bankman was able to fool authorities and his customers. FTX was able to evade the scrutiny of regulators and law enforcement because it was a new company and because the cryptocurrency industry is still relatively new and unregulated. New companies often have an advantage over established companies in terms of regulation. This is because regulators often have to catch up to new technologies like cryptocurrency. This means that there are no clear rules and regulations governing cryptocurrency businesses. This makes it difficult for regulators to investigate and prosecute cryptocurrency crimes. FTX was based in the Bahamas, which is a relatively lax regulatory environment for cryptocurrency businesses. This means that there are fewer regulations and less oversight of cryptocurrency businesses in the Bahamas than in other countries. The reason for the lax regulatory environment is that the Bahamas is a small island nation with a limited economy. The government of the Bahamas is eager to attract new businesses and investment, and it sees the cryptocurrency industry as a potential source of economic growth. Business model was another reason. FTX's business model was complex, and it was difficult for outsiders to understand how the company operated. This made it difficult for authorities to identify and investigate any wrongdoing. Bankman-Fried, the founder and CEO of FTX, was a well-known and respected figure in the cryptocurrency industry. He had close ties to many regulators and law enforcement officials. This made it more difficult for authorities to investigate FTX and to take action against the company. Now these were the reasons why FTX was able to fool authorities, but the real question is now, what about people who have lost the money? It is possible that customers who lost money because of the FTX fraud will get some of their money back, but it is impossible to say for sure how much or when they will receive it. FTX is currently in bankruptcy proceedings, and the bankruptcy court is still working to determine how the company's assets will be distributed to its creditors. Customers who lost money because of the fraud are considered unsecured creditors, which means that they will be paid back after other creditors, such as secured lenders and employees. The amount of money that customers will receive back will depend on the total amount of money that FTX has available to distribute to its creditors. At this time, it is unclear how much money FTX has available. It is also unclear when customers will receive any money back. Bankruptcy proceedings can be complex and time-consuming. It is possible that it will take several years for customers to receive any money back. Customers who lost money because of the FTX fraud should file a claim in the bankruptcy proceedings. This will ensure that their claim is considered by the bankruptcy court. Customers can file a claim online at claims.ftx.com. Customers should also stay informed about the bankruptcy proceedings. They can do this by following the FTX bankruptcy docket and by signing up for email updates from the bankruptcy court. It is important to note that there is no guarantee that customers will get all of their money back. However, by filing a claim in the bankruptcy proceedings and by staying informed about the proceedings, customers can increase their chances of recovering some of their money. The FTX fraud and bankruptcy teach us a number of important lessons, including: be careful about investing in new and unregulated asset classes. Cryptocurrency is a new and unregulated asset class, and there are many risks associated with investing in it. Investors should always do their own research before investing in any cryptocurrency or cryptocurrency business. Not all cryptocurrency exchanges are created equal. Some cryptocurrency exchanges are more reputable than others. Investors should carefully research any cryptocurrency exchange before depositing their funds. Be wary of investments that promise high returns with low risk. There is no such thing as a risk-free investment. Any investment that promises high returns with low risk is likely to be a scam. Have a diversified investment portfolio. Investors should not put all of their eggs in one basket. By diversifying their investment portfolios, investors can reduce their risk of loss. In addition to these general lessons, the FTX fraud and bankruptcy also teach us some specific lessons about the cryptocurrency industry. For example, we have learned that cryptocurrency exchanges need to be more transparent about their operations. Investors need to be able to trust that cryptocurrency exchanges are operating in a responsible and ethical manner. This means that exchanges need to be transparent about their finances, their risk management policies, and their customer protection measures. Cryptocurrency exchanges need to be more subject to regulation. The current regulatory environment for cryptocurrency exchanges is too lax. This allows exchanges to operate without adequate oversight or controls. Regulators need to do more to ensure that cryptocurrency exchanges are operating in a safe and sound manner. Investors need to be more educated about the risks of investing in cryptocurrency. Many investors do not fully understand the risks involved in investing in cryptocurrency. This makes them more vulnerable to scams and fraud. Regulators and cryptocurrency exchanges need to do more to educate investors about the risks of investing in cryptocurrency. The FTX fraud and bankruptcy is a major setback for the cryptocurrency industry. However, it is also an opportunity to learn from our mistakes and to make the industry more secure and trustworthy.